So this is the weekly journal analysis for this week, alongside with the previous 2 weeks as well. This is 1 week here, Monday, so it's the Wednesday, Thursday, Friday. Uh, I'll be sharing the whole June month till now trades over now, because I haven't completed these 2 weeks journal analysis, so I'll include them with this week journal. So in this week, I have take three trades in total. One trade was at 18 and two trades were at 19 June. Only total three trades, one loss, two win. Previous week I had four losses, and the previous week and the before week I had one loss, one break. Okay, so I've already shown all the video. So let's say from 4 June to 19 June, how my performance looked over the period of time. Total trade was 9. I had 2 wins and 6 losses, one break even trade. Win rate was for this 9 trades was to 22.2%. Profit factor was 0.89, and net PNL I'm at negative $0.66. Expectancy per trade is negative $0.7. That means that average amount that I can gain or lose per trade is nearly as break even. As you can see right now, I'm around zero. So when it will over the period of time, if it goes in positive, that says the average expectancy of per trade, how much I can make. RR efficiency is for 49%, and break even rate is 11.1%. Average win, my big win was a $3.12, and average loss was $0.19. Payoff ratio is 3.47. Max drawdown for me was minus $4.45. And now let's talk about a little bit of emotional side, where I had entry hesitation. Like when I try to enter into a trade, I do hesitate. I second guessed a few times that I've seen over the period of time. But over the period of time, through journaling, I have seen that it's coming lower. Okay, it's coming low, as you can see. And in trade anxiety, like during the trade, I would say I have very less anxiety, or very less emotion. It's very moderate for me. Okay, I just try to follow my model. And post trade emotion, I do get emotional, not in that way. I always go into a deep thought of, you know what I did wrong. My first question after losing is what I did wrong. Was it a what kind of mistake it was? Was it a mistake from the market that I have to accept the loss, or maybe I did something wrong? Anything like that. I just try to figure out the mistake that happened, what went wrong. Then resilience is high and confidence is rising. It's an average. Okay, so these are the stats of this whole 9 trades, and let's go talk to a little bit of things that I have changed in this during this period of time. There is two major changes I've done. Okay, there's only two major changes that I've done this time. Is not two, actually one, which is the volume profile. Okay, which is this volume profile. Let me open this one. I've done the major change in volume profile, and let me explain what kind of change I've done so far. So what I used to done before, let's try to understand it first. So what I used to do is I try to used to understand from a specific period of time to the whole session volume profile. Like let's say that I'm about to trade the London session, so I usually get around like 11:30. This is only Indian Standard Time, 11:30, and I'll start marking out candle by candle for the whole session. Okay, for the whole session. for the whole session. Okay, I will start marking everything for the whole session. Now, this is very useful for traders who trade support and resistance and who use solely the levels of volume profiles. I don't use that. My only purpose of trading the volume profile is to understand exactly how we are when we are into a point of interest, how the volume is distributing. Okay, it's like try to understand, let's say that it's better way to present is that I have a POI over here and I have a POI over here. So until one of these two POIs get hit, it doesn't make sense for me at all in the first place to take any trade at all. Means until one of those POIs get hit, it doesn't make any sense for me to watch and try to take a trade. And on this level, when we had none of our POIs got tapped in. It's the same thing for volume profile. Ideally, you don't need to see all of these volume noises for me, or this low volume, this high volume. I don't need this much crap. I only need to understand the volume profile, how the volume profile is building, how the volume is getting distributed throughout the volume profile is when we enter into a point of interest. Okay, you are watching a footprint chart, you are watching your model, anything and you do, you only see those confirmations after you have entered into some form of point of interest. Okay, so what I used to do is I used to mark out all these things. So what it used to have, this used to show me a huge, like it's a bigger time frame data for me. Okay, so it's always used to confuse me in understanding of low resistance, low volume zone, high volume zone, because I have a simple way of understanding my volume profile is when my model is forming. So what is the change I've done? Let me take it first. So before that, I was doing all of this. Now my purpose has shifted from a higher time frame perspective now to a lower time frame perspective. I was using a big range perspective, and I have shrink the perspective into a very small range. Like my idea is, let's talk about this here is we had a 1 hour order block here. So my idea is when we enter into the order block, okay, when we enter into the order block, this is exactly when will start watching the volume profile. Two major signals it can give me. First, uh, where my model is forming, and second, if we have a chance of continuation or not. Now I have mentioned in my other charting sessions that what kind of understanding that I used to do or I used to have throughout volume profile to understand the continuations. And if I'm seeing that, and more so, this is one way. Second is which I call the local volume profile. And the second one is my reversal volume profile. Reversal means, let me tell you, is let's say this is a reversal. Okay, this is a reversal. As you can see, this was a shift in structure. Actually, this was a breakout structure, and consider this one as a shift in structure because we had a late uh, volume delta divergence. Okay, so I'm considering this one as a uh, breakout structure. Okay, so let's actually go to the 1 minute. It's much better to understand there. So as you can see, that I am seeing that once this volume divergence got formed, I'm considering that this the low high low low higher, I can consider this one as a shift. So what I will do, I will, it's this the same, this is the shifting structure. Let's say low high lower low higher high. This is a bullish scenario and this is a bearish scenario. High, sorry, high low or high low low. So this is a bullish scenario, this is a bearish scenario. So what am I doing is, once this breakthrough is confirmed, okay, once this breakthrough is confirmed, is I want to see exactly where we are coming from after this breakthrough, this area, where exactly this reversal area is coming from. Okay, this is exactly when I need the volume profile the most, and the one and only the most. need an area for me. What I'll do, I'll draw the volume profile from the high, from this low, and I'll continue it. Okay, so in this case, here, this is the low, this is the high, this is the lower low, this is the high high. And let's say in shifting is complete. I'll take it from here, from that low, and I'll continue it. I'll continue it. Okay, I'll continue it as this one goes. Why I'll continue it, I'll let me explain a little bit later. But right now, as you can see, my main focus is to see that exactly where we are reversing from should be out of a low volume zone, not an high volume and heavy cluster. Exact low volume zone. That means that was a very less interested area when you enter into that PY. When you entered and reversed from that, we came out of a very less volume zone. Even if there is a high volume zone I enter, I won't consider it, because this is still considered a high volume zone as a fair value price, and price is a very high chance of coming back into this. So I always want that price came out of a low volume zone. This is the first and one and only thing I want to see into the market. Okay, that we are coming out of a sorry, let me just change this color to black. I want to see that we are coming out of low volume zone. This is must. Okay, this is the one and only why. Now, why am I looking coming out of a low volume zone? As I said, I want to see less interest. That means we have a very high chance of market has a very high chance of not going back in. How it will help me? Stop loss placement, and also confirms my model that this shift in structure. Okay, this is a come on, man. This is a shift in structure. Is just the basic context of a pattern. This is a pattern. This is just nothing more than a pattern. But I want to add volume context, which is the key. Okay, order flow, volume, order flow. These are the key points of markets. I want to add them. Okay, I want to add them into my understanding of my model. Into in order to clarify my model that yes, it's a pattern happening. That's perfect, but the pattern should not be random. We are coming out of a fair value gap, and we found a break, let's say found market structure shift. It should have a volume context behind it. Why the map? Why this happened in the first place? Okay, low volume zone. No one is interested in this case. We have this push. Now I can consider this one. How it can help me? If I enter my position here, I know how exactly price has a very less chance of coming back, and I know exactly where I need to put my stop. Maybe below this high volume zone, or maybe this low seems like a very protected low. Okay, this is the thing that I've changed. One is when you enter into the POI, and this is and second one is this is the reversal. This is the reversal POI understanding, and one is local POI. Now, what is the local POI? Like when you enter into that, like this was the first candle when you entered into this POI. Okay, you have to understand is where is that? This was the first candle when you entered into that trade. When you enter into that POI, we don't have any reversal yet. We don't have nothing yet. I don't know even if it's gonna reverse or continue, whatever it is. So I'm drawing my volume profile after we entered the first candle entered into this. I start marking out my volume profile from that first candle that entered into that POI. It's just the same way. If you have a footprint charts, you're not gonna see every single footprint charts happening throughout the day. You want to see specifically those footprint candles when you enter into a POI that have some valid, things. Depending on if I am using ICT, it's order block, fair value gaps. If you're using support and resistance level, it will be support and resistance level, whatever it is. Okay. So exactly we enter into the trade. This is where I'll start watching the volume profile. Now, what is the context that I'll get from the volume profile? If we have a chance of reversing, let's say continuation of this trade, I'm gonna see that I've already said that how I'm gonna see a continuation is about to happen. It's not 100% sure, but that kind of volume formation, distribution of volume, can it usually shows a high chance of uh, continuing into the direction. In that case, I can say that we have a chance of not respecting this fair value gap and order block and actually break through this. This is the context that I'll be able to understand. And once after that, let's say this this reversal is done, I'm seeing my shift is done, that's when I really don't need the local volume profile. That's when I exactly need my reversal volume profile understanding only, and then I will continue it. Now why I will continue it in the same case again, by understanding the volume profile now, I really don't need to see my volume profile in this previous. I want to see my volume profile now, because this will be able to tell me that once I'm into the trade, what's happening, how the volume is getting distribution, how the volume is getting distributed. By having that idea, I'll be able to understand that what are important levels for me after my trade. Now, what it will help me in trade management. Simple as that. If I talk about this, let's say that I have entered into the trade. The first thing I'm gonna see is, let's say I entered into this trade. Okay, the first thing I'm gonna see is, okay, let's see what happens. Volume profile. We came internet to trade. Same. This is a way of price showing we have a chance of displacing higher. It shows in a continuation. So I'm having a better understanding of, okay, my model has a very high chance of it. Okay. Then sudden shifts in fair value POC, and then high volume low volume nodes. Now I'll be able to understand that, as you can see, this now has turned into high volume zone. Are we gonna might reverse from here? I don't know. Let's see what happens. In this case, this seems like a low volume zone, so I might move my stop loss to break even below, let's say, like I enter into this trade. This is a high volume zone start coming, might have a chance of reversal. Have we taken any important levels? Yes, it seems like I've taken this internal liquidity in this case. Do we have a chance? Yes, we have a chance. So what we should do, if I'm getting a perfect RR, then I might take out uh, some of my position and then go break even. If I'm not into a great RR, then I might try to go break even, because let's say I know that we have a very high chance of coming and respecting this low volume zone. So it doesn't matter. So if, like, once this low volume zone, so I'll actually see, like, if price comes and stalls here, like, get slow down, absorption happening, very high chance of pushing to the upside. But if I'm seeing a massive push to the downside, it's most likely gonna go for my stop loss. So I go break even in this case. And then you see price came, started chopping around, doesn't seem like we're breaking through this low volume zone, and slowly we end up hitting our target. So this will help me this way to, you know, uh, after I enter into a trade, it will be able to help me in the trade management. Okay, so three uses of volume profile. First is the local, which will help you to understand the POI respectance. The POI. Okay, first let me also write it down. So POI. First is the POI VP, which will help you to understand POI. Understand POI. Second is reversal, clarification of model, and third is continuationing of reversal VP, which will help you to trade management, obviously. Okay, so this is it, and this is one thing. And let's say throughout this uh, throughout this 9 trades, what are the things that are found? What are the key observation that came into my head that I need to focus on, and I need to understand in the upcoming week? Two things I would say. One thing is I've already watched, but one thing, like uh, two new things. One is called, when I'm calling it an instant push. So you can see it every time into high value, high time frame, low time frame is. Let's say you have a point of interest, and you see a candle comes and breaks through it. What you will call it? You will call it an invalidation. Very nice, no problem. Candle closes, everything's fine. But instantly you see another candle comes, and it forms another displacement. So like we had a displacement here, and just after that we had another displacement, maybe quite bigger than that. Maybe it will seem like a instant displacement. You're gonna see that we have an instant push to the down, breaking through this point of interest, and we have again instant push to the upside, invalidating that first displacement. So what it tells, this is what I'm calling the instant push. So what it's telling it disrespecting the displacement. So what exactly you're gonna see in the higher time frame? Let's say it's a 1 minute for fair value gap, which happened into one of my trades earlier. Okay, so what I see that I wanted to take an entry, and I saw that we were breaking through this. I took the entry, and we had an instant push to the upside, going into our stop loss, which was this small loss in this case. Okay, so after that, so what exactly this was? So if you just look at the higher time frame, you're gonna see a candle forming here, and then in this instant push, we are closing the candle, end up creating a big wick. So you know what exactly this was telling you. So in a lower time frame, you're gonna see it that we are breaking through it. But if you understand this instant push, and if you see this is not a way to understand, this is a clean observation. By the time you'll see this, you'll have an automatic idea that exactly what end up happening into the higher time frame, what exactly end up happening. Higher time frame end up respecting that point of interest. Now time frame may vary, it can happen in, like in this case, we did happen in the 1 minute. We had this 1 minute fair value gap, 1 minute came, 1 minute up. So if you just go to look at a 2 minute time frame, you're gonna see this exact thing. That means on a higher time frame point of interest, and higher time frame candle is actually respecting a lower time frame point of interest. So this actually shows respectance. This is not this is, if this scenario happens, this shows a pure expectance. This is not showing any invalidation, this is showing validation. So this is the thing which I want to talk about, which is this instant push that I found out. And one was a conflict zone idea. I've already talked about the conflict zone. It's like, like let's say let's say that you have this shift in a structure, but just right above you have this fair value gap. Let's say we had a fair value gap. So this shift in structure into the price telling a story of we might have a chance to push to the upside. But once you enter into that, you can say that we might also uh, reverse from here. But there is countless possibilities. Important possibilities that we can go into that and just come back to retrace, maybe come back to manipulate, maybe come back to reverse completely, or maybe man might not even come back and just break through it. So that's why there is a lots of possibilities. Okay, but we have to understand that if it's like this, what can be our best approach not to do anything bullshit. So there is two approaches. First one is to actually wait. Let's say the shift in structure happened here, and we came into that, and we can just come back, retest, and push to the upside. We can break through and end up doing another, uh, let's say, another manipulation, or possibly return. So one is, and let's say this is very important, is your drawn liquidity is up here. It's very important to understand your target. Let's say your drawn liquidity is up here. So best way to actually wait for this one to get invalidated, and then come to say this. Now most of the time, come use it as an inverse and then go push to the upside. Now mostly what's gonna happen is you might look at this. If you had entered here, this is the risk to reward you would get. Okay, very important thing to understand. But if you have entered here, this is the risk to reward you would be getting, and you might not even get that entry in the first place. There is like once that initial displacement happened throughout that POI, you might not even get that. You might not even get that uh, uh, entry in the first place. So what is the best way to do it? So what I end up finding is divide your position size into two parts, such scenarios. And what you would do, you would enter one position half here. So even if it's reversing or doing manipulation, you have a clear idea that You just got stopped out, and if it even reverse, you loses a very small amount. You don't loses your full size. And if you can make an, let's say, 2 or 3 or onto your another half size, you can not only just cover up that loss, you can make even profits. So this is one way. This is the way, exactly. This is the way. This is not a one way. This is the way. Is position yourself with 50% at your shift, and let's see what happens. So once this one end up breaking through and end up happening, if you are getting another entry, you will take it, and if not, then you already have a position running where you can make profit. You are not completely letting the opportunity go. Okay, if it's a play out and you don't get any entry in this initial push, retracement and push, fine, you're still into some position. But if it takes out, you're only losing a very small amount. Okay, you are only losing a very small amount. And there is a little bit catch as well, that sometimes having divergence, let's say here or maybe here, sometimes having divergence actually uh, increase the possibility of this move. Not 100%, but quite a bit. That most likely you are gonna see the breakout. But as I say, not completely every time. So we always gonna do, as a trader, we are always gonna play it safe. Okay, so I can lose minimum and gain maximum. So what I'll do, let's just forget about all of this nonsense here. You model initially play out everything. What are you gonna do? You're not going to gonna go with a full size, you're gonna go half size. And over, as you see the progress happen, as you see we are seeing, breaking through this and everything, you are gonna enter in another position after that. Now you can, based on your intuition, let's say you had a bit uh, divergence into these cases, so you can, let's say, adjust there like 60% or 70% of your entry might happen here. And then because you have a divergence showing, you have a slightly bigger have a slightly better chance of breaking through that POI. So fair value gap, exactly. So you might gonna see it happen, right? So you, in this case, the divergence is enhancing it, so you might enter 70% of your position instead of 50%. That helps you, right? So, and sometimes, okay, bro, like sometimes you just go full size, like it matters, right? Sometimes you can go full size, let's say, yeah, everything is looking so perfect, you can go, but make better way to actually follow this, right? Because you're gonna see this is happening most of the time. Like, let me check it out here. Most of the time you're gonna see it happening. There's like nothing you can do about it, right? So you just have to, like, you have to understand, like, it's not like you, when you're, let's say, happening the 1 minute 15-minute POI. And let me actually show if I actually had one right here, which was maybe this one. So which is this one is, yeah, maybe it was this one actually. Hmm. Yeah, I guess it's this one, exactly this one. Yes, yes. So another 5 minute, another 5 minute. Yeah, exactly this trade. Check it out. End up coming back in the 15 minute. We have this 5 minute fair value gap here. Let me just make it black. And horror. Okay, 5 minute, 1 minute, 1 minute. What you're gonna see? 1 minute, you are gonna see shifting structure and everything. But remember, there's a 5 minute conflict zone. So what are you gonna see? Let's say you entered in 50% in this case, and you enter 50% in this case here. Actually, in full size, because you have this clear push to the upside and like big fair value gap showing displacement. Volume profile seems very good. So I enter full position and I end up going into our target. But we might not go into that and might do a lot of bullshit. So if I had entered full position, let's say 50% of my position, waited for this one to be broken, and end up coming back into this. Now you can look to see, confirmation in lower time frames to, let's check if it happens. Let's say once this end up happening, order block continuation formed, you can take your trade out of here and you get to put your stop, where you had break even. So this is the thing, when you are entering into another position, the first position must need to be broke even. So let's say I broke even my trade here. Okay, slightly a bit in profit. So this trade, I'll put my stop here. That's like, instead of putting my trade, let's say here, it seems like, yeah, it seems fair that if we are not, if only reason we put our stop here because we believe that price has no interest of coming back into this level. So if I'm entering from here, it seems fair for us to enter, our stop here and then the target again. So in this case, you see 1.38 or 50% here and a proper 2.69 here. So that's how you can play it. Now this is a much safer entry because you have seen this one actually end up breaking through. This one's a little bit, yeah, a little bit, very little bit not safe. You're gonna see this kind of thing happening most of the time. So and it also depends, like if price gonna go up, it's gonna go up. But we cannot play by intuition, right? We have to manage these things very well, right? You have to manage these things very well. So yeah, try to manage it this way. In this case, if you lose less. If you win, you can still make whatever. If I do a little bit of math, let's say that my rest, let's say, was $2. Okay, let me just open up my calculator. Let's say my initial risk was $2 and I divided into one, so that means I entered $1 here. Let's say if it was an initial full trade, 2.69 r on $2, 2.69. So initially I would make a $5.38 profit if I had entered full position, but I didn't do it. Let's see how close we are of making that kind of profit if I had entered full position. But this time we entered in different two position for a much better safe entry, and in this case I am sacrificing a bit of my profit. Okay, sometimes it can be beneficial, maybe, yeah, but sometimes, most of the times, you're not gonna see the same profit as you have hold it for the, if you had entered in here. So let's say how close we are. $5.38. Now I entered here $1 into 2.69. I'm entering $1, holding it all the way up. It's a 2.69. So how much I'm making? I'm making a 2.69, and here I entered another $1. I made a 1.138. I made a 1.38. Okay, so $1. So how much I'll make? Let's see. So it's a 2.69 plus 1.38. It's closes around 4.7. So you're risking around, let's say, $1.3, but you are having much safer entry, right? Now current size of my account is 2k, so the profits are very minimal and it's perfect. This time I don't need to see profits. I want to structure myself in like this, so situation comes like this, I'm prepared for this. Like this kind of understanding that you are not taking bullshit actions. So profit does not matter in initial stage. What am I? Okay, so if I just take the same scenario with a 100k account, let's say on 100k accounts, but this is 100k, right? Yeah, let's say you risking 1%. Oh, sorry, you're risking 1% of that account. That's $1,000. So you're dividing $1,000 into 500 and 500. Now you may have to $2,069 $2,690 if you had hold it full. But if you had 1,000, how much you're making? If you're wasting $500, right? Each side, the $500 into 2.69, which is equals to $1,345, and you're 1.18. So 500 into 1.38, sorry, 1.38, 690, 695, uh, one. So you're making a $2,035. You see, this is a $2,000. Now this is $2,000, but here you're making $4. So capital matters. The system has to be established first, and money and capital thing need to come later. Money and capital go, it need to not come, it needs to come later. But right now I want to have solid approaches for my model and situation, specific situation. This is a very specific situation. Most of the time you're gonna see it. So I want to place myself in a very confirmed position, and from there, if I take a loss, let's say give a fuck about this winning, and price end up coming back into this, I end up losing this 50%, and this one end up closing into the break even. So still I lose small percentage, 50%, and uh, this one is end up breaking even. This one would end up going break even if I hadn't took out, let's say, in partials. Right, if I had taken partials, that it might have a chance of getting break even. If not, that uh, close, and I would only lose 50%. So you have to understand this thing this way. Okay. So two major things. Key observation was one was that instant push, and second one is this understanding of final understanding of conflict zones, and what are the major changes that I've done for my volume profile and stats for my this whole 9 trades till June 4 to June 19. So this is where I am right now. So let's see what how we perform in the upcoming week. So in the upcoming week, what would be my main focus? This is also important. In the upcoming week, what I'll be focusing on first, obviously, is going to be gather more data about my volume profile and see how market gives what kind of conditions market gives you, learn from them, and key observations, instant push, and uh, conflict zones. These are the two things I need to be careful about, because these are the things that I found out throughout this week, and these are the key things that I'll be looking forward into the upcoming week. See how we perform in those scenarios if that got present in our upcoming week. So that's for all for the weekly journal analyzation. So that's it.